Good afternoon, everybody. Thank you very much for tuning in to our webinar today. This is Brian Kabateck from Kabateck LLP. I want to thank you for joining us, and we're going to cover today property damage claims, vandalism, civil commotion, issues like that have sort of arisen from recent civil unrest. We're going to cover it. I've got two panelists on here with me today, and the good news for all of you is that you're not going to have to look at me throughout this, that we'll turn the camera off in just a moment and switch over to the webinar, just the PowerPoint itself. So first of all, let me introduce Shant Karnikian. He's going to be joining us. He's one of our senior associates here at KBK. Shant has a lot of experience trying insurance cases with me, bad faith cases. We've worked together closely on a number of different cases. And also joining me today is our primary presenter, Michael Childress. Michael has a national, in fact, international practice on insurance first-party cases. He has handled cases overseas as well as most states throughout the United States. Originally from Chicago, admitted in Illinois and Florida. He's joined our firm recently as of counsel and continues his national practice on first-party insurance cases. So, having said that, the reason we thought this was important was that although there may not be terribly many claims that have arisen out of the recent civil unrest, there are several, and a number of people have asked us questions about whether or not this was covered under a policy, how it would be covered, how it would be interpreted. So today I thought, at least from the policyholder's perspective, we give this type of participation. So at this time, I'm going to turn the camera off, which I know will delight most of you watching. And I'm going to start on the PowerPoint itself. And first of all, let me welcome Shant Karnikian. Shant, thank you for joining us today.
Hello, Brian.
And
you forgot to plug our podcast.
You go ahead and do it. I left something for you.
Brian and I also have a podcast called Civil Action, and we feature Michael on there sometimes, where we cover cases every week, a couple of cases that have come down from the different courts of appeal that have to do with civil issues, insurance issues, personal injury issues. So check that out. It's on Apple and Spotify and other platforms. But as Brian said, today we have a very specific topic we're talking about. So Brian, if we get started.
All right, and let me introduce Michael Childress. Michael.
Happy Friday, everybody. Look forward to getting through this.
All right, and let's get going. So we'll start here with just what we're going to basically cover today in our topics. We're going to talk about the coverage itself. We're going to talk about specifically vandalism and civil commotion, which in some cases may actually be a covered claim under the policy, and other times may be in part or in whole excluded. Then we're going to talk about the civil authority orders that came out, particularly during the riots and the protests to close businesses, and whether or not that would cover, and what those government orders themselves were. And finally, we're going to cover measuring losses.
So the first tile is about a little context about the insurance industry. And, there's been a lot of noise recently about how poor the industry is and how poorly they'll fare if they have to cover covered losses. The purpose of this tile is to demonstrate that the property and casualty sector of the insurance industry has never been in better position than any time in history, really. They had incredible surpluses ahead of this policy year, ahead of 2020. And you can see there was 1.7 trillion in cash and invested assets. And their surplus was I thought, and that's not on here, was I thought 620 billion just prior to 2020. So moving on to the next tile, little background on the two kinds of types of insurance policies. There's two types. The old type are specified peril policies, and
which are still around. You'll still find those policies, right?
There are, and they go back to the standard 165 line New York State fire policy. And there, if the type of peril described in the policy does not occur, you don't get coverage. And then the other type, in which we'll be talking a lot about how they operate, are all risk policies.
Most policies I think you're going to find are all risk policies, at least for most standard businesses, standard business package policies.
Exactly right.
So what are we going to cover about a specified cause of loss? Where does that come up, Michael?
Yeah, so this is an example of the coverage grant in a specified peril policy. And there you can see that it specifies specific perils. When we say peril, we mean causes of loss like fire, lightning, explosion. The part that applies to the webinar that we're currently doing is where it says riot or civil commotion and vandalism are specifically covered. Now, in each specified peril policy does not provide for the same specified peril, so you have to actually look at your policy.
So this language, this paragraph we're seeing here, which is just an exemplar, doesn't represent, you're not going to, anytime it's a specified cause of loss policy, doesn't mean you're going to have this copy and pasted in there. So you got to check what's included in the list, correct?
Exactly right. Exactly right. And on the next tile, we have the standard 165 line standard fire policy is been engrafted into the law of the state of California by code section 2071. And that's a good example of the point we were just making. If you look at that, it does not cover the same specified perils as on the tile just previously.
It just says loss by fire in this one.
Exactly.
Yeah.
So this is the kind of policy that you're going to find, generally speaking, in your homeowner policies, for example, probably standard business policies that cover
California Fair Plan policies often are specified peril.
Generally cover firing,
Right.
fire.
Not often in the commercial scenario.
So we put this in here to give a little context to where we are with insurance. And I think it's always relevant to understand the history, to understand why we've ended up with the kind of policies that we have. When the 1906 San Francisco earthquake hit, no Shant, Michael and I were not alive at that time.
I didn't say anything.
And those earthquakes, most of the policies did not cover earthquakes. So earthquake wasn't a particularly covered risk or peril, but instead the policies provided coverage for fire. And what happened is that the fires followed the earthquake, and that ended up being covered under the standard policy. So for the fire was covered, the earthquake wasn't. Most of what happened in San Francisco was a result of the fire. The fire burned the city, and that ended up wiping out the profits for the preceding 47 years for the insurance industry. So as a result of that, the insurance industry is always smart, and they learn because they really want to cover less and keep more of your money.
Exactly.
So that's when sort of the notion of exclusions became much more on the rise.
And there's an inherent conflict in insurance, in property insurance in particular, in that they wanted it to appear as if they cover everything, hence the term all risk policies. And then when they have claims, they want to interpret it very strictly so as to exclude everything. And so there's a conflict between the marketing and the claims handling. And that's what essentially our practice is based on, is the holding them to the promise.
That's why I think this information here about how these exclusions came about is important, because even if you see a policy that says we cover the risk of all physical loss or damage to the property subject to these exclusions, the exclusions is really where the meat of the coverage kind of is. You have to look at the exclusions, because you see all risk. That doesn't mean everything is covered, and we see this in various contexts. So what happened after that? What did they get motivated to do after?
Well, I mean, I think it's just important to understand is that that coverage, like stroke or something, coverage has continued to constrict in California over time.
It has.
And the Northridge earthquake is a good example. After that, the policies change. But really, let's move forward now to what we're talking about here today.
So generally under an all risk policy, the standard, and we've all alluded to it, is all risk of direct physical loss and damage are covered unless excluded. And so the rest of this PowerPoint will follow roughly the analysis of establishing coverage. We'll discuss first, and then we'll look at the exclusions, and then if there's any exceptions, which I don't think there are, we will address those. So next tile is the all risk coverage grant, and this is how you know it's an all risk policy. And it's where it says we will pay for all risks of direct physical loss unless the loss is excluded or limited.
I tell most people that their insurance policy, if it's an all risk policy, their insurance policy may be 20 or 30 pages, single space, double column, and most of the policy or the exclusions are what is not covered by the policy.
Right.
So explain, Michael, how specified coverages, which are typically different than an all risk policy,
right,
will sometimes appear in an all risk policy.
So a trend that we've been seeing lately, given the advent of more robust exclusions, is the addition of specific coverages into an all risk policy. And so it's kind of like a combo policy of all risk and specified peril, albeit the specific coverages that are re-added often as additional or extended coverages are on a limited basis, and you have to pay particular attention to the language of each specific cover. And later on, we'll give you some examples of that. But generally, in a specified coverages that are added back to all risk would be an example would be vandalism, building glass, theft, vacancy, because vacancy is usually excluded, something called mysterious disappearance, which you would think would speak for itself, but it actually hails out of the old days from the West when cows wandered off the reservation and nobody.
Watch it, Shant. No jokes, please.
And
I
nobody
was going
knew.
to say, or like when I don't show up for work or something.
Yeah.
Right. We often refer to that as mysterious disappearance.
Yeah.
Could,
Michael-
could I get coverage for that for Shant when he doesn't show up for work?
Now, Michael, in these situations where you have a specified coverage in an all risk policy, does that mean that it'll have a separate provision and it might even have its own limits or certain terms that are specific to that coverage?
It will, but that does not necessarily mean that the specified coverage obviates or negates the all risk coverage.
Okay,
And so you got to read them in concert.
together. Yes.
So really coverage is a big question, and you're going to look for physical damage or physical loss of property. Much bigger issue when it comes to the business interruption claims arising out of COVID-19. But here, I don't really think that that's going to be much of an argument, that you're talking about people whose businesses have been damaged, physically damaged as a result of the issues, the civil unrest, we'll call it, for lack of a better term.
But given the exclusions, trying to determine exactly the circumstances under which the property was damaged and the extent of damage is going to be, where the issues lie and where the carriers are going to try to make hay. So covered causes of loss, there's two versions. We want you to be aware of the policy forms. The older version covers risks, which is much broader. And the newer version removes the word risks and just covers direct physical loss. So
That's narrower, right?
it is narrower.
Yeah, well, I mean, words mean something in an insurance policy, and if the older version says risks of, and the second version, the more recent version, says direct physical loss, excluded the words risk of, that must mean something, right?
It should mean something. We're dealing with contracts. And
Here's my absolute favorite picture out of our PowerPoint today, because I just think it's a great shot that we added to it.
And this is not Beverly Hills.
This is absolutely not Beverly Hills. I think this picture was taken in Hong Kong, but I don't know what it has to do with our civil unrest in the United States, but it's just a great picture, so I selected it. So let's talk now specifically about vandalism and civil unrest. And I'll say, as we jump into this, guys, that one of the things I've heard consistently from people is, oh, it's not covered. Oh, it's not covered.
Right.
Oh, this happened because it's these riots, it's not covered. And I think that in the next 10 minutes or so, we'll show you that that's probably more likely than not true.
So here in this tile, what we've got is definitions of vandalism and malicious mischief, which,
Easy for you to say.
well, exactly. And who knows what malicious mischief is anyway. But where they're actually covered as a named peril under a policy. You can see vandalism basically is the willful and malicious destruction of property, and malicious mischief is similar to vandalism. I don't know why they feel the need to distinguish malicious mischief. I just kind of like the term.
I don't know. It could be one could have intent, one couldn't, or it could be like so many things in the law where words have just sort of evolved over time, and no one gets rid of them or clarifies them.
Yeah, I mean, it seems like if you're committing vandalism, there's no doubt that it's malicious.
Right. But I think the key here, ultimately, the takeaway is that it's the act and the resultant harm that it causes, and not so much the motivation that's behind it when we're looking at whether or not something's covered.
So, I mean, if you've done enough property cases, you can see vandalism in lots of different ways. You can see that bad guys that go through buildings and steal things, and in the course of stealing things, break, destroy, cause other kinds of damage. We know of, graffiti on buildings, breaking windows. All of this, has happened. Tampering with electricity. I mean, there's certainly plenty of cases out there that talk about property being destroyed because of someone tampering with electricity. So let's.
I guess there would be, vandalism, and then vandalism combined with looting or theft or intended
Right.
burglary.
A lot of these seem to bleed over into each other, so they'd be hard pressed to try to separate them out and say theft is covered but one's not covered.
We try to do is include some different endorsements or extensions of coverage, and like I say, always be careful of what you're looking at in the policy. What E-word are you looking for? Is it endorsement or exclusion?
Right.
So this calls itself an endorsement, but I think it's really an exclusion, isn't it?
It absolutely
Clearly is.
This is an ISO form. For those of you that don't know, that's the Insurance Services Offices, which it standardized forms that most, not all, but most carriers will use in their policies. They can choose from to use in their policies.
And one of the points here is that these endorsements often follow at the end or in the beginning of the policies, and they're not in the basic policy language. And so you have to be sure when you're going through the policy to go through the whole thing, every single page, all the way to the end.
And get your declarations page and take your declarations page and match it up, not just with the endorsement or the exclusion or whatever it may be itself and the number. So this one up at the top, the CP1055, et cetera, but also some of them times they'll have years that they're issued so that they match. You want to make sure you have the whole policy.
So I had a case once where we litigated based on a denial letter that attached an endorsement, a protective safeguards endorsement. And as we prepared for trial, I noticed that the endorsement that was attached to the denial letter was not in fact part of the policy. We moved in limine and ruled out their entire defense and settled the case.
So that's an important thing to keep in mind. If you're handling or looking at insurance cases or just even helping someone, get a full copy of the policy, not just a declarations page with a couple of the big important endorsements, but oftentimes it'll look like it's a lot, it'll look like 150 pages, but make sure that every single one of the endorsements listed on the declarations page is actually attached and you actually read it, because the title of something like this, the vandalism exclusion endorsement, as Brian said, is it an exclusion? Is it an endorsement? You have to read the actual language. And reading this ISO form, you could see that they're looking to limit coverage or eliminate coverage for vandalism.
So Michael, tell us what this particular exclusion is doing with respect to the policy.
Well, it's taking away all risk coverage for vandalism. Vandalism would be normally covered as part of an all risk policy, and it's adding this endorsement to exclude.
Pretty rare, isn't it?
It is. It's not typical. Vandalism is usually covered, and in fact, going back to the specified peril policies, some of the states include vandalism in their specified peril policies, and this exclusion would not operate to reduce coverage.
So as I try to move us along here, let's go on to another extension of coverage here, which is a vacancy provision. This is really and a potential exclusion for, and you see this in all these kind of vandalism theft claims, particularly where the building is potentially vacant, or at least the carrier argues that it's vacant.
So where you have vandalism coverage, it is often negated if the building is vacant. And so the analysis becomes, and the question becomes, what does vacancy mean? Does vacancy mean unoccupied? Is it vacant if you still have your possessions there? Is it vacant if you've left with the intent to return? The law is, in fact, that it is not vacant if you've left with the intent to return or you have physical possessions there.
So with respect to this notion, and you see this typically in policies about buildings being vacant for more than 60 consecutive days, I've always understood that to be, I mean, the carriers will argue that any degree of vacancy equals vacant. And I've always understood it to be meaning completely abandoned.
That is correct. That is correct. If there's any remaining personal property in the structure, or if you let's say that you had a lease but the tenant hadn't taken possession, the fact that you have transferred possession to the tenant is not necessarily vacant.
And I found in the cases that I've worked on that involve an issue or involve vacancy being raised as a defense by the insurance company, that vacancy is often not defined in the policy. So it's a very intent and fact specific inquiry.
I mean, I would argue that not to dwell on this, but I would argue that vacant means gone, done. Nobody's
right.
there.
Here's
nothing.
A law school hypo for you. What if everyone's kind of been home because of the COVID-19 lockdowns and then these riots or protests or whatever we call them?
Well, there you go.
And what if you're the building owner and your building isn't vacant? You have people paying rent and they're tenants. All right, we've enough angels dancing on the head of a pin here. Let's go on
we
to
actually have a case.
Specifics, exactly.
Yes, where the insured denied the claim because of vacancy, and had the property been occupied in any respect, there would have been coverage, but we refer you to that case.
All right, another type of example is this money and securities coverage, and this is sort of special or specialized coverage. My understanding is, Michael, generally that most of these policies will take away, we don't cover currency, we don't cover gold, we don't cover, art, et cetera, et cetera. So this is an extension of sort of putting it back in the policy?
Well, oftentimes there's limitations on certain types of business personal property, and especially where robbery and burglary, money and securities, art and whatnot, they're often limited in the amount of coverage they'll give. And if you want to cover beyond, say, $1,000 or $10,000, you need to get a specific extension of coverage like this.
And another example is theft, damage to rented property.
So here's the distinction between ownership and possession. The duties and obligations of the tenant depend on whether or not the tenant will have coverage. If the tenant doesn't have responsibility, then the tenant doesn't have coverage.
And I
So
think,
meaning if the landlord requires that, let's say, broken glass
Part
be
of the lease,
fixed,
yes,
then there is coverage. If it doesn't, then it's not covered.
exactly. And there's going to be a series of policy forms related to the difference between landlords and tenants here.
So this language is lifted from actual policy forms, right, from a CNA policy.
Exactly. And so here's one with respect to building glass. Building glass is it's a specifically added coverage, and the obligations or rights to make the claim depend on whether you're a building owner or a tenant, and the lease. So you'll need to be able to look at the lease and see what rights and responsibilities are owed in the lease.
And interesting about this endorsement, because sometimes glass is not covered under the policy, sometimes it is. Under this one, there's no specific cause of the loss, no specific peril that has to occur.
Right.
So it doesn't say we only cover it when there's been, vandalism. Here, it's interesting. It says including glass breakage and damage to glass by chemicals accidentally or maliciously applied. So I read that to be like graffiti or somebody trying to deface the glass, or even an accident.
Right.
All right.
Exactly right.
Another endorsement involves debris removal. We see this in a lot of fire policies, but they'd certainly be just as applicable in business owners who've had some sort of civil unrest or people running through their business looting, right?
Yeah. So you would think that debris removal would be part of any property damage, and the reason that this provision is notable is that it does not apply to trees. If trees get damaged as part of the vandalism. And so again, this is yet another example of the insurance industry trying to limit their exposure.
Well, also though, a lot of times debris removal in policies is additional coverage. So it can be a percentage of the structure coverage itself, correct, which provides additional coverage.
Correct. Now turning beyond the coverage grant to the
other E word. The other E word.
Precisely. And so the point here is that all exclusions are not the same. You've got to pay special attention to the Leadin Language for the applicable exclusions. I'm having a real hard time enunciating.
Not as hard as me. It's okay.
Malicious mischief.
Yes, exactly. So the exclusions are usually found in Section B of an all-risk policy, and there's 3 different kinds of Leadin Language, each one limiting in a somewhat different fashion. The first kind are the kind, and the reason we call it anaconda language is because it excludes any other cause, regardless of the sequence, or regardless of whether it's concurrent or whether it contributes at all.
Like an anaconda, it wraps around everything and tightens it off and chokes it off, right?
Exactly right.
And is the operative distinction between the first one, anaconda, and then the next two, that the first one includes language like any damage caused directly or indirectly by any of the following? Is that correct? It's just broader.
Whereas exclude B2 and B3 exclusions allow for other causes of loss. And so oftentimes when you're looking at damage, you're looking at multiple causes of loss, and you've got some covered and some uncovered. And the question is, can I go forward with my covered causes of loss if I have uncovered causes of loss? And if it's a B2 type exclusion, you can. And if it's a B3 type exclusion, it actually brings it back in.
So this is really important. Words matter, right? So a lot of times what you'll see and what people sort of talk about when they claim that their policy won't cover it is they see certain words in there like civil commotion, riot, insurrection, and we're going to talk about those for a few minutes and see if they're excluded under the policy. So a lot of perils, a lot of policies will have exclusion that say things like civil war, revolution, rebellion, insurrection, invasion, enemy attack by armed forces. And the one that people will sort of jump on here is insurrection, thinking that insurrection, we're going to talk about that. But first, Michael, how does California Insurance Code Section 2071 factor?
Right. So here we're back to the standard fire policy in California. And not only does it include specified peril that it insures, it includes specified perils that it excludes. And the one that might apply in this situation is insurrection, or potentially, I guess, rebellion. You know, if you want to call the protests an insurrection or a rebellion. But let's get into an actual definition of insurrection.
So, you know, is it going to be excluded? Because an insurrection is, we put the definitions here. And one thing I've done is just taken a thesaurus and looked at what the definition of insurrection is. And here it's an organized attempt by a group of people to defeat their government and take control of their country. Now, there are some that might argue that the protests were that, but that's not what we're talking about here. We're talking about something that's akin to more like civil war.
Right, and civil commotion is specifically covered under the standard fire policy in California, but insurrection is specifically excluded. So what's the difference, and where's the line drawn?
Well, I think an insurrection is exactly that. It's trying to overthrow the control of a government. It's an insurrection. You don't think of an insurrection as people protesting, running down the street.
Well, I mean, could it be people trying to civilly disobey an order by the municipality?
I don't think so.
I would argue that, but even if it got there, Michael, even if it fell into this definition of what we see in the second bullet point there, that it's an organized attempt by a group of people to do something, I don't think anyone here was trying to defeat the government. But even if you characterize it as that, the damage that was caused to property, I don't think was caused by those people or that movement. I think the damage was caused by opportunists that were taking advantage of the situation.
Correct.
So
but they were certainly trying to defeat the police. They were trying to defeat the authorities.
There's an argument there, but I still don't think the damage was caused by the movement itself.
Who would have ever thought I would be arguing for the insurance industry?
Right. Well, let's talk about riot and civil commotion then.
Right. So here's some definitions of riot and civil commotion. Civil commotion, of course, is covered. Riot, by and large, is not covered. And the difference is a matter of scope. Apparently, civil commotion is more people than a riot.
Look, in my humble opinion, I was here during the Rodney King riots, and I was actually here during the Watts riots, but don't remember them. It was too small. But Rodney King was certainly more akin to a riot, although I even think that was more considered to be a civil commotion and covered than what we saw earlier this year in Los Angeles and around the country, which was certainly not a riot. It was more often than not protest, and the protest was used as sort of a diversionary tactic for people who were trying to loot.
Correct. Well, and to Shant's point, there really were three different constituencies, and you've got to think, you can't just look at the protests and say they're protests. There were three distinct groups going on there. There were the protesters, there were the people that were there to do property damage and vandalism, and then there were the looters and opportunists that were taking advantage of some of the property damage and causing some of the property damage for the express purpose of looting.
So you can't take all these people and throw them into a bucket and say they're all bad.
Exactly right. But one thing we've seen the insurance companies do is say it was a riot or a protest, and therefore it's not covered, when in fact the different constituencies causing vandalism and looting might be.
Yeah, and what's surprising here is the insurance company's response has been, and that's explained on this slide, has been that under named peril property policies, this is often covered. So
exactly right.
Which is kind of rare, because usually the message they send out, for example, when businesses got shut down as a result of COVID-19, the message was, no, this isn't covered. There's been no damage to your property. Over here, I don't think they've taken a industry-wide position, at least not a blatant one, that says it's not covered.
Do you think after the very unified and forceful response to COVID-19, they felt guilty and that they needed to take a soft?
No, I don't think I don't think they have emotion. In fact, I think that despite the fact that the industry has come out with this statement, or at least one trade group in the industry, I still think that there are carriers out there that have denied claims.
Absolutely. The point of this tile is that do not forget the all risk analysis. You've got covered coverage for damaged property unless it's excluded. And so if you have damage, make a claim.
Let's talk about business income claims, civil authority, dependent property. We got a few other side issues to talk about here, and we'll start with civil authority. So one argument that people might want to raise is that because the businesses, now we're getting away from damage caused by any kind of looters or anything like that.
Physical damage to property.
We're talking about people whose business has been closed.
Right. And so as a result of some of the vandalism, these businesses were boarded up and they're closed. And I guess one of the questions where there's going to be an issue is if they were closed anyway as the result of the government shutdown orders, can they make a separate claim for business interruption if they're closed as a result of the physical damage to their property? What do you think?
Well, I think that there's physical damage to their property. I think it could be physical damage to other adjoining property that is within a range or a zone. That's what times a lot of these policies require, that it caused them to be closed. But I think one of the problems here is that while there certainly was civil authority that closed neighborhoods and areas down, in fact, in many large cities across the United States, there were curfew orders, closure orders, things like that. But the first problem I see is that these civil authority coverage has a 72-hour waiting period, which is effectively the deductible, right? So it would be, that's problem number one, is that you have to have been closed for 72 hours, which I think would be consecutive.
Yes.
There is a limitation of 4 weeks. That's probably not a problem here. But the other problem I have is that a lot of businesses weren't closed other than, they were pretty much open from sunrise to sunset.
Right.
And so how do either of you feel that factors into whether or not there'd be coverage under civil authority?
I would think that there would not be coverage under civil authority if they were open for business during daylight hours.
Business hours. And I would also point out that civil authority requires that they be closed as a result of some covered damage, and that's what precipitated the civil authority order. I don't know if you're going to be able to make that.
Now, to make it even more complex, you have restaurants that were already closed anyways. You might have a restaurant who says, look, I was basically a dinner house. I didn't do much in the way of lunch business, so I lost most of my business because of that. But they probably were closed already. And, if you're interested in the topic of business interruption insurance, I think on our website, we have a business interruption webinar about this, which will also go into more detail about the civil authority coverage. Let's move on. What's dependent property? It's an additional coverage. What is it?
So dependent property coverage is where a property that you rely on in any way, shape, or form for the generation of your revenue gets damaged in a riot or civil commotion, and therefore you have losses as a result of it. Let's go to the next one.
And
here's the endorsement language.
We'll go back to that. There we go.
You did that already? Okay.
That's
Talk about that.
So here's some examples. If your supplier is shut down, if your drivers can't drive, if you can't have buyers.
So it's upstream and downstream, right? It's if the places where you get materials for making things are shut down, or the people you typically sell to are shut down, where you store your equipment is shut down, your drivers, your workforce maybe to some extent.
Exactly. So now we're getting into government orders.
So what are the government orders here? We added a couple of them. I had never actually seen this before, but the city of Los Angeles had one.
The curfew order.
Where the mayor declared basically the curfew because of the death of George Floyd.
Right. And then there's the one from the city of New York.
Right.
Where it was imposed.
Curfews necessary to protect the city, right?
Right, 8 to 5 a.m. Of course, as I understand it, there were no people in the city of New York anyway because of the.
There were riots in the city of New York. It was, they went into Macys. I think they went into Macys right there in Herald Square.
No, but I think the point Michael was making is people were already not out.
Right.
No, but there were making a mistake.
Protesting.
Right.
So now let's talk about measuring losses for this. And we have different types of damages or different types of damage coverages that may exist. So damage to building, debris removal, we've talked about it already. Decontamination costs, what would you call that?
Well, so here in the, into the specter of the shutdown orders and whatnot, I think with potentially contaminated people running through the facilities, that if you are a business and you you were looted and you had vandalism, you are going to need to do a full decontamination in order to reopen. And that, of course, that cost should be claimed as part of your property damage claim. Obviously, you would have damage to business personal property or theft of the goods. Where damage to business personal property is distinct from theft of goods is the goods would be what you would sell. The personal property would be the things you use to operate your business. And then, of course, last but not least, you'd have business income.
Go into a little more detail on what the damage measure is. And I think that this is typically in insurance policies, if you've dealt with them, you know this, that most policies will cover replacement cost if it's actually replaced, both for personal property and for the structure itself. Actual cash value is generally not defined, but that's really what the item would have been worth.
Kind of a market value concept. Yeah. The thing to know here is that you don't have to wait for replacement to actually receive money. You can make a claim on an actual cash value basis, get paid for that, and then when you replace, submit for the difference.
Right.
Exactly
right.
Right.
Insurance oftentimes you new for old. So you had something that was old and maybe was 20 years old, but you're going to get new for it. That's what replacement costs, and most policies cover that.
That's right. Actual cash value is defined in the state of California, and here is the definition by statute, code section 2051.
I think, and this is important for not just these types of claims, but in all property policies. So it's important to know the distinction there.
Right. How do we determine business income loss? So that certainly could be a claim that many businesses have, both as a result of vandalism and as a result of the business interruption.
And that's a creature of policy language. And so you've got to look at your policy language, although it's uniform in most cases. And so this tile shows that you get net loss or damage that you would have expected plus extra expense.
Had the loss not occurred, like the expected.
And then the question is, how long do you get it? And that's defined by something called the period of restoration, which is the time that it would take for you to get back into business with all due dispatch.
So not just opening your store and it's physically repaired, but you're back to business. You're
having the stock put back on the shelves. Now, under the current circumstances where we've got shutdown orders, related to COVID over the top of the period of restoration, what is reasonable?
What does that do? I would argue it extends it.
I would too, if you can't
We're
reopen.
Insurance lawyers that represent policyholders, so.
Yep.
There's undoubtedly another point of view there. What are extra expenses?
Extra expenses are monies that you spend to reduce your loss. They're necessary expenses that reduce the business income loss you can claim, such as if you bring some of your employees back and pay them to clean up, you would get to claim those as extra expenses.
So we're coming to a close here, and we'll take a few questions if anybody has them, but we just caution people over and over again, a number of things. Some are on the slide, some aren't. One is your broker, your agent, anybody like that usually is the last person you want to ask when you're in the claims process. I would skip over them. Secondly, I'd also make sure that your clients don't deal with the insurance company directly, that you let a lawyer or a professional handle it. And as a lawyer, if you don't feel that this is your area, be very careful, because people can really fall into traps. And we've seen this with some claims arising out of COVID-19 where the carriers have tricked even skilled lawyers in other areas into saying the wrong thing.
Yeah, most people, lawyers included, think of insurance in with respect to car accidents or tort situations, and these property claims are very, very different in that they're creatures of precedent and they're creatures of the policy language. And if you don't understand how the policy operates, even as a lawyer not practicing in this area, you can get into trouble.
And the insurance company can hold that stuff against you, the representations you make to them or the words you choose to use when making the claim or answering their questions about the claim.
It's really important.
Come back and, hurt you.
It's really important to understand your coverage and then have a coverage theory before you present your claim or make contact with the insurance company.
Policies oftentimes also have time limitations, which you have to be careful of. A lot of homeowner policies will have a 1-year limitation, and a lot of times commercial policies have a 2-year limitation. It's told while the claim is pending, there's a number of cases on that in California, which will help you or drive you on that.
In other states, such as Indiana, it's 1 year or 2 years from the date of loss. It's a very state by state analysis. It differs depending on which state you're in.
So don't let the insurance company tell you that recent events surrounding the protests are not covered. We believe that they are. We've had some questions. If you have any questions, we have a couple extra minutes here. We'd be happy to answer them. But the first one we had was whether or not this was insurrection. I still think that if we're able to, I think it's a very, very high standard, in my opinion, to meet insurrection. I think it's almost a close cousin to civil war
or treason.
Right. And I think if you look at the language and the definition of what is an insurrection, it will give you good arguments. If the carriers are arguing that this was some kind of insurrection, I'd be interested to know that.
We also got a comment from someone that says that the CHOP, the Capitol Hill Occupied protest in Seattle, was arguably an insurrection. Maybe that's closer on the spectrum. I don't know if it would meet that standard. I'm sure there's a lot of business owners in that part of Seattle that now have claims, and whether I think the insurrection stuff and the revolt stuff usually falls under the war exclusion. That's where I see it.
It does.
I look at. I don't know if that's not going to be covered, but who knows? That is closer on the spectrum, though. That's more of a toss-up, I'd say, than what we saw in, let's say, somewhere like Los Angeles.
But I mean, so how would that occupation of part of downtown have caused property damage? I mean, you would still argue that the people causing property damage would be vandals.
Yeah.
And vandalism would be covered.
Right. Especially under an all-risk policy.
And how are you going to know what's in their heart?
Right. That's why I said it's a very fact and intent driven inquiry. So I think it would be hard to deny coverage for that.
Correct.
I've got another question. Will we be distributing the slides? We'd be happy to. If you email us and ask for it, you can email, actually, why don't you email JP, which is JPL, just like the Jet Propulsion Laboratory, but with not quite the same brain power. JPL at kbklawyers.com. JPL at kbklawyers.com. No, that is an insult to you, JP. JP's great. JP set this up. Yeah.
We can distribute the slides. Yeah.
Right. And we'll be happy to distribute it. If anybody else has any questions, pop them up now, please. Otherwise, we're going to wrap up here by telling you all thank you very much. That we appreciate you all participating today and watching us. And here I am again. This is a perfect way for you to end an otherwise perfect.
Don't ruin their Friday.
Right.
Don't ruin their Friday.
Right. You don't get to see these other two clowns that I'm working here with.
That's right.
But you get yourself lucky. So
we're wearing Hawaiian shirts.
We thank you all very much for tuning in. Hey, listen, as Shant mentioned at the beginning, we do a podcast, and our podcast is called Civil Action. We feature a review of recent cases that have come down from the California Court of Appeal, California Supreme Court, Ninth Circuit, the United States Supreme Court sometimes, which we have to explain to Shant what it is. And then we also interview people. We have interviews. We'd love to know if you have other subjects you'd like us to cover. We're very grateful for those of you that listened in and participated today. And if you have questions, you have cases, you want to talk about anything, please reach out to us. So having said that, thank you all, and have a good weekend. We appreciate your participation.
Boom.